Good morning, good morning, good morning. How's everybody doing? Make sure you're subscribed so you can chat with us on the stream. And welcome to another day in paradise, I guess you might say. And the Fed did nothing as expected. Didn't even really address the elephant in the room of oil prices going higher. They just kind of deferred. And after Jerome Powell's speech kind of wrapped up, we drifted lower. And it looks like we're gonna maybe drift on down. Maybe, I guess if you look at the finger pointing right now, the excuse is, more missiles flying all over the place in the Middle East. And, we still have problems right here. So, good morning, my magnificent monsters. Welcome back to the show where I skip the artisanal oat milk latte and main lines of pure caffeine and figure out who exactly is trying to pick your pocket today before the bell even rings. So today, I'm looking at a $1.8 trillion ticking time bomb. That's a bomb that Wall Street built, wrapped in a shiny bow, and put a gift tag right on there. Sold it to regular retail investors as a safe, high-yield alternative, and let that creep into your retirement account, your 401k. Now, while everybody was sleeping on this, the private credit machine the wheels started coming off. Literally, if you look at the auto parts, was kind of the first part of where it started coming apart. The exits, they're being padlocked, boarded up, and gated, so to speak. And when the apex predators of this arena at Apollo Global Management start warning that they expect to recover only 20 cents on the dollar for the loans that they put out there in private credit, maybe we should stop doom scrolling on social media and pay attention a little bit right here. So this matters. Why? Well, let me give you the bottom line up front. In the first 60 seconds, because your money is on the line here. Private credit market, the shadow banking system that stepped in with traditional banks, got deregulated out or regulated out of this industry because it was too dangerous in 2008. Shadow banking system is cracking. We're seeing funds freeze investor withdrawals, which is Wall Street speak for we don't have your money and we can't give it to you. This is just, it's not just a problem for billionaires. This is contagion. It's spreading to the consumer level. It's in your IRA. If you have any kind of managed IRA, it's hitting credit card debt. It's now creeping into buy now, pay later loans. If you're holding shares in major private equity like Apollo, APO, Alpha Papa Oscar, Blackstone, Bravo X-Ray, or Ares Capital, Alpha Romeo Echo Sierra, you're in the blast radius. If you hold consumer finance stocks like Capital One, which bought out Discover Card, that's COF, Charlie Oscar Foxtrot, you need to hedge your bets here. But as always, where there's panic, there can be profit. We're going to take a look at the traditional banks like JPMorgan, JPM, who maybe are smart enough to walk away, and the distressed debt vultures who are about to feast on the carcasses of this over-leveraged industry right here. Private credit, what the devil is it? Let's rewind for a second in case you're still here after the bottom line. What exactly is private credit? After the 2008 financial crisis, regulators slapped traditional banks with some massive capital requirements. They said, hey, you just can't lend money to an idiot on the street anymore, just any old idiot with a pulse. We've got to have some rules to this thing. So the banks pulled back. But guess what? the people they had been lending to still needed money. That left a hole. There was still this opportunity to make big money. So enter what we now call private credit. Firms like Apollo, Ares, Blackstone, KKR. The shadow banking system was created to fill the void. They started lending directly to these companies that needed cash. Sounded brilliant. Cut out the middleman, cut out the big bank, get a nice fat interest rate locked in, deliver some juicy yields to investors that give you the cash up front. And this market exploded from about $400 billion in 2015 to a staggering $1.8 trillion today. It's just a unchecked fluid loans floating out there in the shadow banking world. But there's real money built on top of this stuff. And then Wall Street got greedy. They looked at the massive pool of institutional capital and said, hey, you know who else has money? You know how we could really take this thing up to 11, 12, 13 maybe? Regular people that put their money in their IRAs, in their 401ks. They created some semi-liquid retail funds. They promised regular investors like us that you can get your stock market-like returns, 8, 10, maybe higher percent, but with the safety of bonds, because that's what these are. By the third quarter of 2025, these retail funds had swelled to $500 billion. And we're talking about some ETFs out there. But there's a dirty little secret that's not in the glossy brochures. According to Barclays, roughly 55% of these private credit portfolios are stuffed with loans to software and tech. And herein lies the rub. Specifically, we're talking about smaller private equity-backed software companies that were bought at nosebleed valuations between 2018 and 2022, and then a funny thing happened. Artificial intelligence actually started working. Anthropic's Claude and other AI agents, ChatGPTs, Gemini, Grok, well, they began to systematically obliterate business model of mid-tier software companies. The moats that these companies have been building evaporated almost overnight. When you could just fire up Claude code and tell it what you wanted to build and wake up the next morning and it mostly work. Why do you need a multi-million-dollar software company? Well, you could just build it yourself and it'd be a custom tool instead of trying to fit that piece of software into your infrastructure. Stock prices for public companies been flushing out. Suddenly, the cash flows backing these private credit loans have started looking incredibly shaky. When investors get spooked, they want their money back. In the first quarter of 2026 alone, wealthy individuals tried to pull more than $10 billion out of these private credit funds. But remember, you know how I called them semi-liquid a second ago? That semi part is doing a lot of the heavy lifting, at least for these early redemptions. These funds typically cap withdrawals at about 5% per quarter. And when the redemption requests start flooding in, the fund managers, they throw up gates, so to speak. They shut the spigot off. Redemptions get restricted, if not done away with. Blackstone, BlackRock, Morgan Stanley, Cliffwater, they're all restricting withdrawals. Those are big names. They're honoring maybe 70 cents on the dollar of what investors requested. And it's getting worse. The number's getting smaller. Just recently, we got news that a fund run by Stone Ridge Asset Management, that LENDX fund, that's Lima, Echo, November, Delta, X-ray, if you're taking notes, they told clients that they're only honoring 11 cents on the dollar. 11%. The other 89% of the capital is trapped. But here's the terrifying part about Stone Ridge. They don't hold software loans. Oh, no. They hold consumer loans. Buy now, pay later debt from a firm, personal loans from Lending Club, Upstart. When it says, hey, would you like to finance your Starbucks? This is who's financing them. Stone Ridge. Merchant loans from Stripe, Block, all those buy now, pay later. Like paying 4, paying 10, pay weekly. Everybody's seen that, right? When you buy things online lately, or maybe even at a regular store, you can finance your groceries these days with buy now, pay later. Genius idea, right? JPMorgan saw this as a problem almost 18 months ago and said, hey, we're no longer going to let anybody with a Chase card participate in any of these buy now, pay laters. Like that's ramping up the credit exposure that we've already got to find balance on. So, like if you have an Amazon Prime card, you can't use it for one of these Affirms or paying 4 or paying 6 or whatever it is that they've got. And this kind of proves the contagion is jumping the firewall. It's not just about AI disrupting software anymore. The American consumer itself is tapping out. Average credit card debt just hit a record high. And think about this for a second. Every American in the country now has an average of $6,580 per person. Every American. On top of the $150,000 or whatever we owe toward the national debt. Charge-off rates are spiking to levels we haven't really seen in over a decade. The shadow banking system is taking on water from all sides. Corporate software, consumer defaults, the players that are bleeding, the players that are bailing. Who are they? Let's take a look at the heavy hitters here, because when the whales start bleeding, that's when the sharks come circling. Blood in the water. First off, we have Apollo Global Management. John Zito, the co-president of their asset management arm, spoke at a private UBS conference recently. He didn't just sugarcoat it. He called out the arrogance in the private credit markets. He explicitly predicted that loans made to generic mid-sized software companies, what he called Joe's Software Company, they're going to recover maybe 20 cents, maybe 40 cents if you're optimistic on the dollar. So let that thing sink in for just a second here. One of the biggest players in the space is publicly admitting that they're going to have 60 to 80% losses on a massive chunk of the industry's collateral. That's not just like smoke in the room. That's like a 5-alarm fire going on. And then we have JPMorgan, Jamie Dimon. He's been warning about this private credit and the cockroaches for months, and now he's actually acting on it. JPMorgan just led a group of banks in pulling a massive $5.3 billion debt issuance for Qualtrics. Why? Might you ask? Because leveraged loan investors looked at the AI disruption risk and said, no thanks. Qualtrics' existing loans are already trading at 86 cents on the dollar. JP Morgan's smart. They see the contagion risk and they're stepping out. They're walking away. So, how do you trade it? How do you make money off this? You can use the shadow banking stress test framework. In every crisis, there's direct losers. There's relative winners and there's contrarian vultures. So, direct losers avoid, maybe short them. And the major private managers, they're going to take a beating. And maybe this is just getting started. Apollo, APO, Ares, ARES, Blackstone, BX, KKR, Blue Owl, they've already shed over $100 billion in market cap since the beginning of 2026. And we're only, not even 3 whole months in. Stocks are down like 25% or more in this little group. The market pricing in the reality that their fees are going to dry up. Their income is going to suck. They're going to have to take some losses. Their balance sheet's probably going to take a hit until the gates reopen and the bad debt gets flushed out. These are potentially falling knives. If you try to catch them, you could lose an arm. We also have kind of a shark watch. Maybe it's a death watch on some consumer credit stocks. With the Stone Ridge Fund gating consumer loans, companies have heavy exposure. And these ones with vulnerability to this space, like Capital One, Synchrony Financial, they're facing rising delinquencies here. It's an interesting story here. And then, we have relative winners. We have some safe haven type things. As long as the contagion has been managed, JPMorgan, they've been pretty adamant that they're staying out of this. They're managing the risk, marking down collateral, walking away from toxic deals. Goldman Sachs and Morgan Stanley have also been trying to tighten up their lending standards, especially to private credit groups. They're letting the shadow banks take a hit while they sit on their fortified, regulated balance sheets. And then you have a contrarian type opportunity out there. This is where potentially gets a little more fun. When forced selling happens, perfectly good assets get thrown out with the garbage. We're seeing this rise of secondary funds and distressed debt specialists who are stepping in to buy these loans at massive discounts. So you've got Bose Weinstein and Saba Capital. They're actively launching tender offers to buy shares of publicly traded business development companies, BDCs, at 20 to 30 cents on the dollar for their net asset value. Think about this for a second. They're buying $1 for maybe 70 cents, maybe even lower. And retail investors in these BDCs are kind of panicking. And we're seeing this whole flush out there. Keep an eye on publicly traded BDCs. Some of them have been really smacked in the face lately. Some of them have heavy exposure to this toxic software loan shenanigan stuff. But others might just get punished just because they're a BDC. And they're not. And, it's like throwing everything out. It's like sell everything, figure it out tomorrow. It's kind of what the market looked like this morning. Sell everything, figure it out later. And as Sixth Street Partners noted, this reset is going to take a while. We're not talking about quarters. We're talking about potentially years for everything to finally shake out. The capital flow dynamic is shifting, and the distressed debt specialists, the guys who know how to find the value in a hot mess of bankruptcy, well, they know how to squeeze blood from a turnip or a stone or a distressed asset. They might have the best vintage and return of their careers right here in this hot mess. So, listen, we've seen this movie before. It all played out in 2008. Mortgage-backed securities was the name of the game back then. The shadow banking seized up first. The redemption gate slammed shut. Everybody said, the subprime problem's contained. Until it wasn't. And it brought the whole great financial crisis system to a halt. In 2026, the collateral is different. It's software. It's buy now, pay later. It's the variety of other things that haven't even peeked out of the light of day yet. But the mechanism of panic is exactly the same. The illiquidity trap is exactly the same. When one of the cards falls and a large chunk, a large table leg gets pulled out, the system was leaning on it. If you're chasing yield in a semi-liquid private credit fund, understand that You're the exit liquidity for smart money. The era of easy double-digit returns in private credit, probably done. The cockroaches are coming out of the woodwork. Stay liquid, stay skeptical, watch out for the spreads. The credit cycle always repeats. It's going to happen again. These companies, if there's money to be made, somebody's going to try to find it, and it's going to get, then you get fast and loose, and then you have a financial crisis. It's almost guaranteed. So be careful out there. Let's look at some charts, see if we can find some money today to make out there in the markets. What do you say? What do you say, everybody? How's it going? Buenos dias, senores and senoritas. All trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. This presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument. If you desire personal financial advice, well, there's people you can hire for that, but 90% of traders that trade stocks, options, bonds, forex, futures, cryptos, treasuries, bonds, they lose money. So be careful if you do any of that stuff with your own money without having a plan and a proven track record. So we got that FOMC stuff held straight and narrow there. The kind of the sour taste in the beginning of the day. I think it's funny they call it green, but it was actually, these numbers creeping higher is actually a red event. And then today we got some unemployment claims. Got those under control. Not, we'll see some natural gas and stuff like that, but not much else. And then tomorrow, no real economic news at all. Powell speaking on Saturday. That's interesting. Seems to not really be a major event. Next week, flash manufacturing. And just not much. I guess the rest of the world catching up to daylight savings. So not much happening through the end of the month here. Some JOLTS jobs, and then into April. So yeah, not really much. We kind of went through the big show here. We have the big OPEX basically between today, which is the last day to trade index options that expire in the morning, and then the big show tomorrow. If you're not aware, this is the end of the quarter. And the big monthly options expiration. You kind of, if you're new to the game, you're like, well, options expire every day. That didn't used to be the case. In the beginning, we only had monthlies. And in some cases, we only had quarterlies. And that kind of history of options is still baked into a lot of early players out there. A lot of the big funds and stuff like that only play monthly. They don't play daily. They don't play weekly. That's why you see this third Friday of the month on some platforms, it's like bolded. And if I pop over here and pull up a platform and type in something that has some extra options here, we pop it in here, like you see the monthly here, and it's bold. That's the monthly. And it doesn't have a W by it. And when you look at the volumes in here, they're like way higher than the next expiration. And it's all because, even that weekly, even that, 1 week out, a lot of people play weeklies. They've added these 3 times a week for Apple. You could go to SPY, though. Same kind of situation. These have dailies. The today's options, well, there's a lot of players. Tomorrow, the numbers are way bigger. That's the normal monthly. So if you're new to this game and you're like, why are the volumes so weird? There's a lot of funds and stuff that only play these bolded ones. They don't play all these expirations in between. And that big expiration create something called an OPEX, options expiration event. And we call it like a triple witching or a quad witching, or a, there's all sorts of names for it. Where you have the end of the, end of the week, end of the quarter, end of the, and you have the main equity options. You have the VIX options already expired yesterday morning. These index options with the AM settlement, they expire out. There's tons of money in that. The last day to trade those is today. They expire tomorrow, though, at a price established after the open. Craziest thing. So if you trade those, be careful. If you have no idea what I'm talking about, if you go to like an index like SPX and you look at it, you've got these W's and then you got an AM in here. This AM one, the last day to trade is today, even though it says March 20. And then the price that it resolves at is determined tomorrow at some time after the open. So that's a crooked game, right? But if you look at it, there's a lot of people that play in here. A lot of money plays in this. Right here. Big money. So when you see a $1 trillion options expiration and it says so much of it expires in the morning, it's those morning expirations. And then so much expires in the afternoon, it's everything else. Including the afternoon options right here. And this one that says March 20 with a W, that expires at the close tomorrow. Whereas March 20 AM expires at the open. Clear as mud, right? This is kind of the history of options. Now, index options have, they're separate here because they have a special expiration process. Regular stuff like Apple, Amazon, SPY, QQQ, all the regular kind of ETFs, ETNs, equities, they all play by the same rules. They're US style options. But the indexes like SPX, INDX, RUT, VIX, there's a variety of other ones. Those all play by a different game. They're cash settled. So be careful when you just trade options, assuming that everything's the same. Make sure you stay informed. We have that big OPEX. I don't have a total on it yet, but I'll do the best I can to figure it out. So SPX diving out, SPY. Look at that. Diving below. I know a couple people ought to be pretty happy here this morning. Beautiful dreamer. Let's see what we got today. I'll come back toward the end of the show and kind of outline where I expect price to hang out today. We definitely took a spill out the bottom there yesterday. QQQ. Yeah, definitely took a dip out the bottom of the box. Right down around that big option. So we don't have to hang out at that big level through tomorrow. Just being down here today can clear it out. So be careful here. This big level we've been talking about at 590. Now there are other big levels on down. But we can clear this, just being down here today, we can leave that in the dust. Suck people into these puts and then take off higher. It's a game that big trader desks like to play. So, the real deal, though. When you look at this, we still need to go down here lower low on the Qs. Still need to go down there below 580, roughly. INDX still need to go down there. Still need to do it. Haven't done it yet. Getting close. Still need to do it. And it might be the 3-day roadmap line we're cruising for. Could take a trip all the way down here. This is all we need, but we could take a trip down here. SPX. A little bit different since we went higher high, but this might need a trip down below that low right there. Might need to take a trip down in here. It might. It's close. It's looking at ES overnight. What happened? Continuation happened. We're not even lower than the right now on S&P 500 futures. We're still actually higher high or higher low. I mean, higher low. But the target's still down here. In Q. Same thing, higher lows, but that target still down here. Russell. It's almost like we got a 5-yard penalty. That could take another spill. So we're retesting this breakout once again. Back the retest. Couldn't get off the mat the first time. The more we sit here, though, the higher the risk for a bigger pullback. So be careful right there. We haven't gotten any of the upside confirmations yet. Well, there's opportunity to buy here. If we start down below, say 23.50, 23.50, you might want to stop it out because we're probably coming on down here. If you got bullish already, we may have to take a little trip down here before we can go higher again. Oil just churning in here. This looks eerily like the bubble pattern. And we do this like exponential rise here, and then we drop and we chop in here, and then we break down. But be careful. We might, there's the possibility that we're doing one of these consolidations right here, and we're about to go even higher before the party's over. Still a distinct possibility in oil. Hasn't dipped out yet, and we could just be consolidating before we take another rip higher. And what are the reasons? What reasons might we go extremely higher? Who knows? More hiccups in the land of oil and spices. Maybe China takes Taiwan because we're busy screwing around with Iran. Who knows? Who knows what might shake out here? GC. Oh, looky. Guess what? This is going lower low. Anybody was doubting me, check that baby out. Right there. Here we go. Ideal spot to bounce anywhere lower than that low right there. Probably down around 4,000 to 4,400. Oops, need 2 4s. That's where I'm expecting it to go. I'm going to put an alert right there, lower low. Lower low is all we really need. Tagging the roadmap line. But it could come all the way down in here. Could dip down to 4,000 or even 3,800. Could. Likely to find some support in that prior high right there. Just like we did before. So we may come down, get a little bounce, and then do a final flush, and then start the next leg. Been warning about that. Silver also probably coming down to 50. Be the ideal spot. Lower low is what we need. Been harping on that for a little bit. Bitcoin pulled back. Imagine that. Somebody said it might need to pull back. And let me show you. Show you a little something here. Pull up. That right there had that draw like A, B, C. We might just pop up in there. Get a little pullback. I'm not sure where I drew. I bet it's on a different Bitcoin version. Let's see. Nope, I didn't save it apparently. So I've got a thing drawn with 1, 2, 3, 4, 5, and on one of the Bitcoin charts I have, and we're going right up the friggin' path with 1, 2, 3, 4, 5. So I don't know if this was the all of the A right here, and this was the B down here. And this is the 1, 2, 3, 4, 5 of a C. Or if this is going to just be way more complicated. But right now, got that move up. We're working on this retrace. We're already kind of hitting it. Right here. This low. This high. This retrace needs to hold here. If we start below this level down here, around 67,000, something else is playing out. But as long as we hold this support, we're probably going on up. Probably in the roadmap line vicinity. May make a retrace. We don't want to overlap this high. And then final move. It's probably the path for Bitcoin right there. Funny enough, it's doing exactly what I thought it would so far. DXY. Now this is interesting. DXY pulling back while gold is pulling back. So first move down, retrace up into that 618. Next move down, likely to come down here. NKD. And this is probably the culprit right here. Didn't even bounce up to, I mean, I guess it did bounce up to that line. First move, second move, third move, fourth move. Global liquidity sucking out of the system and pulling gold and Bitcoin down with it. Imagine that. A little bit of SP. So here's the culprit right here. As we flush on down, this could get more violent here. We see more downside in gold, Bitcoin. Apple holding up really well. But it's creeping on down. If we get lower low than this low we had right back here in January. If we get lower than that low we had in January, probably coming on down here around 200, 210, somewhere in that zone. Amazon holding up really well. Did poke a little lower on this low here. We're kind of avoiding the uptrend of lows. I want to see that holding here and go higher though. Google probably needs to take a swift little trip down here. Find some support, then we can go higher once again. Meta. Poking below this uptrend of lows. This is starting to cause me to question whether we're going higher right now or if we got to make a lower low and start over on the reversal pattern. This reversal pattern's always looked kind of sketchy, especially this rejection right there. It was holding really well with the higher lows, but now all of a sudden not looking as strong. May reset. And it happens. Like sometimes, even if we get an ideal bounce, this sort of thing happens. The peak of Bud Light mania, we had this really nice low in here. And had a nice move up off of it. Nice, beautiful retrace. I mean, I was trading this. Like, I was looking for this to explode higher. And then we did this multi-month consolidation crap right here. I was like, oh, sugar honey iced tea. This one's probably coming back. And it did right there. Came back. So this took, look how long that took. Now, it's got a proverbial crap together and it's going higher. It looks like we're going to cruise on up to the targets, potentially. This is one I did try to trade right here, and it didn't pop like it should have. When we failed to pop right here, it was GTFO time. So that may be happening on Meta. We may be coming back. Double bottom, maybe lower low. We have to reestablish this down here. And then start out with a new move up, retrace. Maybe one that's cleaner than this one. Microsoft, I'm thinking that this might go lower. I'm not sure yet, though. I don't know if I'm going to be sure until it does it. And I'm talking about lower than this low back here. NVIDIA, I'm pretty convinced that this is going to come back to this area. If you want to be a buyer at a lower price, this is probably the zone that you want to be looking at. It retests this breakout that we had. These highs right here, when we broke out right here, we'll be retesting it. We haven't retested it. Breakouts usually get retested. Tesla coming on down to 370 as the prophecy foretold. That's probably where we're going. May dip a little lower than 370, but 370 is where we're probably going. Netflix, I'm looking for this to come back down in this area, find supports, and turn higher, break through the roadmap line, go up, test that bigger 618 up around 108, maybe hold the roadmap line from the top, and go even higher. Now, I go pull gainers, things that were moving up $2 or more in the pre-market, things that are moving down $2 or more in the pre-market, put them on my list, and I need to refresh this list because that is not the right list. Save, reload. There were no tickers on my list today that were set up for a market roadmap entry on a daily chart. Zero. No. It's yeah. Nice work, Romer. Good job, buddy. Glad you made some money on those puts. All right, jumping over here. GDXGD, which is probably going to be a 3x leverage short on miners, down 5 below, popping. This could be a breakout right here. We could go cruising. I talked about this a while back. Now, one big rip off the lows invites a large correction at some point. So watch out. We'll probably do a large pullback at some point up in here. Target up around 400. Line. I'm not convinced this is a reversal yet with the lower high. If we can hold the roadmap line, break back higher high, this is probably the bottom in place on a line. Dull and dust and all these short golds, gold miners. I've been warning about that for a little bit. LNG, oh, look at that baby going. I actually had an alert yesterday. Close your calls, you dummy. 313 upside. More short silver, short gold, SMT, dumpster fire, SMST. Don't touch that bullshit. CF Industries hitting the targets. Could go up to 142, but I would expect a pullback here. BLO, ripping. Sky's the limit here. Oil, as long as it keeps being crazy, 272, 345. We're probably going to see a mega rip here. As long as oil keeps being crazy, XOM, BLO, those are real oil producers. Then you got other companies in the mix, Chevron. Oxy, though, more of a domestic producer, but they do get advantage from higher oil prices. So be careful here. This is still a lower high. This one's not in the same shape. Not much was on the poppers list today. Just throwing that out there. Another dumpster fire. When dumpster fires are on the poppers list, it's a day to be freaking careful. Just saying. SanDisk, it's got a lot of fluff in here. Now, suppose China took over Taiwan some way, somehow. Maybe with military action, maybe with not so much military action. Maybe they did something more economic-wise. What would that do? TSM is kind of the big driver. TSMC. Taiwan Semi. This is kind of the big driver of all the AI stuff right now. They're the main big chip producer, right? I mean, you got, sure, Samsung does some, and there's a couple other players. Intel got a little bit, but Intel doesn't really make their own chips. NVIDIA uses Taiwan Semi. Like, there's no secret here. So what if China did something and took over Taiwan Semi, made it a state-owned thing? What kind of wrench does that throw in the monkey works? Monkey does it throw in the wrench works for all this AI craze? How much fluff could we take back out of this? It's a threat. So if you're heavy into this stuff, be careful. Threats are abound. Look at that, coming right back to the roadmap line as the prophecy foretold. Tongue in cheek when I say that. MU could come back. KLAC, come back. Momentum, come back. Oh, right to the roadmap line. Our gold. Right to the roadmap line. Right to the roadmap line. Beautiful. I tell you what. Beautiful dreamer. Now it's time to start thinking about where you might pick up some of these. Let's see. What's Ashante? AU. All of those hitting. PPLT. That one's hitting. So we're looking at an imminent bottom in gold coming up. WDC, STX, back to the roadmap line. Baba, whew, dipping on down. Darden Restaurants. Now this is set to pop. Like, we're retesting the roadmap line here. 237. Copper back to the roadmap line. FCX. Back to the roadmap line. Wow, this is all looking good, ripe for a bounce. So build your list. Shopping. Where you think we're going to go? There's no guarantee we bounce. There's throwing that out there. It's just opportunity for these miners to bounce off the roadmap line. It may not work. If the gold thing has run its course, as Sledge, I was talking to you about, like, I didn't see 7,000 gold, but if we do the correction, then 7,000 gold comes on the cards. So this could all be setting up. Hood. That's at support. Not really breaking down. Still looking strong. Dell. That's set for a rally on up to 178. Looking for opportunities in here. Ooh. That one's probably going lower. HL. Potential for this to bottom out here. And it may need to go just a little bit lower. Could bottom here. Break back above that 618. 38 on the upside. Kratos. Hunting the bottom. High, low. Break back above 111. SSRM. More mining. Break back above. Workday. Here's one to watch right here. Can this stick this 618? Break up through this 618. Break through the roadmap line. Back test. Yeah, this could be sufficiently flushed out. Like that was a target down here for Workday. BST. This also could be the reversal. That move up, that retrace. Look how swiftly. This is a real indication right here. This candle in particular. Right here. You see how we dipped in here and immediately reacted like that? Came up, stalled out, retraced, held in here again. Swift move up. This is the kind of stuff. This is the kind of price action that indicates we might be about to rip. Could be some nice opportunity here on VST. Talking about up here around 230. UAL working on this pullback. Could not break out the first attempt. 129, 142, possibly bigger levels up here. 250, 300. Morgan Stanley working on this pullback. I would expect this to pop again coming into financial earnings. So we've got next week, the following week, and then they report earnings. So we probably got some runway to rally for a couple weeks heading into the financial earnings there. Morgan Stanley, Bank of America, JPMorgan. No setups on the list today, so let's take a look at SPY, see what we can read in the tea leaves now that we're after 10 o'clock. See what we got cooking, good looking. Pull up the gamma charts. Garangamer made a nice discovery yesterday. If you use SPXW, you can actually pull up the S&P 500 daily options right here. Nice find. Good job, dude. Big levels in here. Where's the biggest? Right down there below us, 6,500 for tomorrow. This might still have some downside legs to it. It's 100 points lower on SPX. Look at the SPY though. See what we got cooking. See what we got cooking. 660, the big level. 650, just, it's about half as big. Still sitting here though. No real bubble formed like we had yesterday. And look at that, 700 million now. Almost 800 million. Whew. The market's saying we could go on down. Yikes. Let's pull that on down to 645. Top into this baby. Thinking 655. Which is, no, I said I said 655. That's not correct. That's not what I meant to say. 666. Yeah. Can't read. Can't read good. It's right there. 660. This right there. With a downward bias here. Now the levels. Let's see what we got cooking here. 18th, which was yesterday, still in here, so it's skewing the whole thing. There we go. Now look at that. 20th, $11 billion of gamma tomorrow. This is that's why I say tomorrow is an OPEX for the records, probably. And that's the gamma, not the nominal right there. Probably gonna hold it in this 658 area would be my guess for today. Which is kind of right where we are. That would be my guess. Anything can happen. We're down below the big level, so see what happens. I don't know. That's the playing field. Downward bias. Would not surprise me at all to make it down to 645 on SPY. Bum, 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 bum. Choo, choo, choo. This is where I like to play in the NASDAQ. And unfortunately, the trick to pull up options for the daily does not work with NDXP. They just don't have NASDAQ options on Bullflow. Why? Go ask them. I don't know. I don't work for them. Just have an affiliate code in the description. If you want to grab this for a fair discount, maybe let me have a couple bucks. Literally like a couple bucks. Use the link in the description to grab this right here. They don't have a free trial or anything. You just have to jump on it. It's like 30 bucks a month. Pretty affordable, I feel like, especially for the information it provides. It's probably the cheapest place I found Gamma. Plus, they have all these unusual options, scanners, and crap. They just have a ton of. They have a real-time option flow dashboard, and I just use this Gamma thing though. Right here. Whew. They got big levels stacked all the way down in here. Look at that though. Wrong number. 900 million for tomorrow. That is the biggest level I've seen on Qs in a while. Really sucking them in. Not much playing today though. I'm going to put this up to 595 and down to 580. 595. And 580. That's the zone. Look at that. 900 million. They're locking it in, but this one's growing though. If it gets away. We might do a big flush out later today. Just be careful, everybody. This is what scares me, is like when you got these levels stacked all the way down here, it could be a giant dip and rip kind of day. We could see this thing Who knows what the reason is, but we could do this. One of those days where we get it, all of a sudden it just starts going down. That's what it's starting to look like. Trip down in here. And then take off. That's what it's looking like. All right, let's pull over the levels. See if I can figure out where we might. Much tighter on the Qs. I'm gonna go with 592. It's my EWAG. Educated Wild. Yes. What did it say? 580. I say 582. I think I meant 592. 592. And that's kind of, we're hanging out in the general vicinity. This was the big level. 590. And we're there. See if we can, see if we hold on to this or if we take a trip down today. I don't know. Like maybe we have to wait till the OPEX and maybe shenanigans happen next week and then we clear the field and go higher. Not sure. Not sure. And this would be handy to me if you could set the expirations you see, but you cannot. It just piles up all the options. So that limited handiness to me. I'd rather just use this and look at where the options are sitting for the expirations. And that's what we got cooking here. So be careful out there, everybody. Things could get spicy. That's what I'd say about that. Things could get spicy. Yeah, I mean, I know the SPX are stacked all the way down. Like, circle back to SPXW. They've got them stacked every big level all the way down like this. Remember, big players playing in this. This is not usually retailers, but look at that. 1.3 billion, 2 billion, 1 billion. This is where, when they talk about the big OPEX, there's big money playing down in here. 300 million, 600 million next week. This is one to be careful. Like 1.7 billion at 64.75 for the end of the month. That's the second biggest level. Oh yeah, that's the biggest level. Just sitting 6,500. Second biggest level, end of the month, 64.75. We might go visit that. And then the third biggest level is higher. This is kind of like the options market. You know, this is reading the tea leaves. What is the option market telling you? Where might we go? And remember, this is where big money plays. So big money bets, $2 billion right there. Now, if we're in the red, which we are in the red, that means the market makers are hedging in the direction of the market. So the market dropping, they're selling. Market popping, they're buying. Creates more volatility, faster moves. Be careful out there. I'll be on Market Masters 11:30. I'll be back here, same bad time, same bad channel, 11:15 tomorrow. Have a great week. Have a great day. Be careful out there. I'll be in Discord too.